Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar plunged nearly 100 points in the early hours of this morning on the back of a less dovish tone from the FOMC Chairman Jerome Powell. After numerous attempts of tackling the 60-day moving average here, as you can see here, at least about 6 times, the fact is that the dollar retreated from 71.90 and plunged to the lows of 71 cents. The Fed move came despite President Trump's attacks in recent weeks on the rate hikes and Jerome Powell personally stance as the chairman. The president has complained that the rate increases are threatening the economy. At a news conference this morning, after the rate decision, Powell went on to say that Trump's tweets and statements would have no bearing on the Fed's policy making. In his policy statement, though, the Fed issued Wednesday, after its latest meeting, that some further gradual rate increases are likely. Previously, it was referred simply to further gradual increases. My view, though, from the break of the 71.90 60-day moving average brings us closer to my objective of 70 cents and could even see by the end of the year 69.5, which is I've been holding for about 6 months. Any advances above 71.55 will be seen as a sell zone and look towards 71.1995 to shorten the position or add to position. Interesting to see that despite, as I mentioned earlier, Trump's tweets, the Fed did go 25 basis points and indicated that projections into next year were less by 1, with only 2 more projections and 1 further in 2020. The quarter point hike now brings in a range of 2.25 to 2.5, lifting the benchmark rate to its highest point since 2008. The increase will mean higher borrowing costs for many consumers and businesses. The Fed's move came despite President Trump's attack, as I mentioned earlier, towards Chairman Jerome Powell personally. Before the Fed's rate decision, the euro dollar was challenging up towards the region of 114 to 114.65, and it did reach the highs of 114.38 before plummeting to 113.60. It is assessed that further weakness should come back into play for the euro, and I'm still holding the region of 111.60.80 as a target, and I'm still a seller above 114 as we continually reject that level. Although the MACD and the technicals aren't overly supportive to this view, so do keep your stop losses accordingly to your risk management and above the 114.65. Well, dollar yen did take another challenge to the downside and got to a low of 112.08 before bouncing. It is assessed, though, that the dollar should increase and therefore respect this level of 112.15, but keep your stops very close, because if we do take out 112.15, this will see further weakness down towards 110.80. Any advances now looks to resistance of 112.85 to 113.35.45. The pound weakened slightly and after the statement dropped by about 50 points. It is likely, though, that the market will probably take a bit of a breather here, although still holding to a bearish sentiment since the break of this descending triangle does project a target of 124 down to 122. As long as we maintain under 127.2050, then I still hold my bearish view and still look towards that level around 124. Gold nearly got to its objective last night of 1,260 before rejecting. The high was 58, and from the rejection now suggests that we may have hit a bump in the road to the bullish case, and therefore could see a retreat back towards 39 or back to the recent lows of 31 to 34. So I'm not overly bearish towards that region, but on the flip side, I'm not overly bullish at these present levels because of the rejection, and also the MACD is coming into play to a negative stance. So I do expect to see a pullback and some profit taking now as the market slowly unwinds its longs. I'm slightly bullish in the oil as it respects the level of $45 overnight and recovers modestly around just over 1.5%. In respecting that the $45 level holds, then I do expect to see a rise up towards the region at this stage of $48 to $49 to $50 a barrel. If we do break under $45, then I would stop out around the lows of 44 and look for a target around $39. So just be aware of that if you're trading from the long side. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.